It's a new day, a fresh episode of Business Morning on Channels Television. Good morning. Welcome to about an hour of relevant business conversations. I'm Amy John Mekwa. Well, let's start with updates from the world of business. The Central Bank of Nigeria has attributed the unavailability of the eNaira Speed Wallet to an ongoing upgrade in Google Play Store. This follows the absence of the app from the Google Play Store on Wednesday after about 100,000 downloads. However, the Speed Wallet is still available for users of Apple Store. Meanwhile, the Central Bank has alerted members of the public of fake Twitter handle targeting the eNaira. This is coming barely 2 days after the financial market regulator successfully launched the eNaira, which placed Nigeria as the first country in Africa with a central bank digital currency. Latest data from the National Bureau of Statistics shows that China was Nigeria's #1 import trade partner in second quarter of the year. The report indicates that China recorded 29.9%, which is 2.08 trillion naira of the total import, which stood at 6.95 trillion naira within the period. A further analysis of the NBS data shows that India topped list of the first 5 countries among the major export trading partners, as it recorded 18.7%, followed by Spain, which recorded 10.3%, Canada 7%, and the Netherlands 5.9%, the US 5.1% also. Infinix has unveiled its Note 11 series to the Nigerian market. The new device launch, which had in attendance brand influencers, Nollywood celebrities, and loyal consumers, provided guests the opportunity experience to look and feel the Note 11 series. According to the management of Infinix, Note 11 is packed with a lot of new and exciting features to support gaming, strong camera resolution, battery life, and a whole lot more.
Work hard, unwind and play hard is the idea behind the choice of venue and the personalities that have shown up at this beach location somewhere in Lekki, Lagos. While it's an atmosphere of relaxation, the evening has been put together by the promoters of one of Nigeria's leading brands in phone manufacture, Infinix. It's the unveiling of Infinix Note 11 series for the Nigerian market. And since the event to herald this unveiling has been patterned to suit a less official outlook, there's some explanation to that.
Infinix doesn't settle for the norm, so we don't want you to settle. We want you to break the extraordinary. We're sure most people are already having fun, playing on the extreme sports, quad bikes, the horses. We want you guys to do more of that. Have fun, turn up with us, play big with Infinix.
So with Infinix Note 11 series, what's in the offer and what's unique?
First of all, it has an impressive 6.95-inch screen, which captures awesome images in wide shots. It has a 64MP triple AI camera, which gives you awesome shots from long range, short range, day or night. The Monster Gaming Kit is awesome for gaming and every other high power function that a phone can use. And is also powered by a 5000 mAh battery. This device is awesome in experience and awesome in usage.
Looking into the future, Infinix says they've got your dynamic and changing expectations covered.
Everything that comes after this is going to be a lot more intensified. Like I said, we also have the Gaming Master, and this is also going to bring the UGC content. So for us, we're going to be telling people, to come out of their comfort zone and do extreme things. We're going to be promoting extreme sports with this Play Big Note 11 series, and so people should watch out for that. There's a chance to win as much as 500,000 naira by just going out of the ordinary and, playing big.
When you think dimensions, display, camera, memory capacity, battery life, and more, then Infinix says you think Note 11.
The The 27th Nigerian Economic Summit has ended. The conversations which started at the event continue to dominate the economic space. The theme, which was securing our future, the fierce urgency of now, covered challenges of of doing business, the place of fintechs, financial inclusion, and a whole lot more. But after the conversations, then what's next? Well, that's what we're about to find out with a member of the technical committee of the 27th National Economic Summit. Is also partner at Aston Young, Mr. John Wajumogu, joining us to talk about that. Good morning, Mr. Wajumogu. Good to have you on the show.
Good morning.
So first of all, I'd like to
be here.
Yeah, I'd like to say congratulations on a successful summit. And then, of course, after that, let's know some highlights from the conversations that you had there.
Thank you very much. First, I would like to congratulate the NESG for organizing a very successful summit. I am very proud that EY supported the NSG as part of the technical advisor to the Central Organizing Committee. The summit, as you mentioned, was premised on the theme of securing the future of Nigeria, which is really a reflection of the changes that is sweeping the global landscape when you think of the imperatives that came out of COVID, of which the situation we're currently in, and as well as the imperatives of the fourth industrial revolution. And the amplifier, the urgency of now, is an emphasis on how rapid things are really moving. But to that, the key highlights that resonated with me, it's really looking at the attention that was paid on human capital, a recognition that human capital is probably the strongest resource that we have as a country, and the potentials that exist in us being able to enhance and leverage our strong human capital endowment in driving strong economic growth. If you put this in the context of the new economic order that is dictated by a knowledge economy. I mean, there's been a transition from factor-based to investment-based economic approaches to what is now a knowledge-based economy. And for a knowledge-based economy, human capital is the key value driver that can allow any nation to use it as a lever for economic growth. So for me, that really resonated. The attention that was paid to that and all the different dimensions of human capital as it leads to inclusion from a gender and a youth standpoint, and emphasis on the other aspects of human capital, such as social interventions in the form of education, health. For you to be successful in this knowledge economy based fourth industrial revolution, countries that will come out on the other side stronger and more robust are ones who've paid attention in the intersectionality of education, innovative learning, research and development, investments in technology, and their enabling policies. So that really came out of this session. Of course, there were discussions in other aspects of public and socioeconomic life that was really important, such as in security, strengthening the political economy, digital transformation, which links back to the knowledge economy. That were the key highlights for me that resonated.
Yeah, well, very interesting. And I do know that I think that also brought up conversation comparing the budget set aside for education and health compared to others, even the money spent on subsidy. And I think the federal government also came to a kind of criticism on allocation for education and health.
Yes. What you will find is that it was quite a robust conversation, and that's what you expect from events such as this, because by organizing this sort of summits, you're able to bring cross-sector society to come in and give voices to give a forum and voices to some of those issues that may not have a platform to be expressed. And in that regard, the public sector was able to hear from civil society, hear from private citizens on their expectations, particularly with the budget that was released. And I believe the public sector after all these robust conversations, will go back and relook at some of the programs and initiatives that underlie the budget and try to identify ways to make sure it speaks to the issues and the contentions that came out of this past 3 days of robust conversations.
Well, another area was the macroeconomic stability for recovery and sustained growth. What are some of the conclusions in this area?
So, if you think about the amplifier, the urgency of now, it is a recognition that things are moving very rapidly, and if you put that in the context of our demographic situation, whereby we're the largest population in Africa, and we're growing at 3% per year. You're going to see, if we continue at this pace, it is estimated by 2050 or so, will be about 400 million people. That's quite a lot. So we cannot afford to grow at an incremental pace. We need to grow exponentially. And in order to do that, we need to create an enabling environment that stimulates job creation at an exponential rate, that energizes economic activity, that facilitates the inflow of capital, both domestic and foreign, but not necessarily the inflow of capital, but that the output that comes out of that capital is very impactful and transformative. And then also looking at what I believe and ties into the human capital potential that Nigeria has, is being able to crystallize the huge demographic dividend that we have. You look at our population, the size of it, of course, is a favorable demographic attribute. But the fact that we have a young population and the potential that having such a large number of your population being relatively very young gives you certain impetus that, quite frankly, a lot of nations may not have in terms of the consumption potential that represents, the productivity potential that represents, and again, the ability to use that to engineer yourself into exponential economic growth. So those things were the action points that came out as tools to continue to sustain and create a stable macroeconomic situation that gives confidence to investors to come into Nigeria, gives confidence to people in Nigeria or on the future, and also enables improvements in partnership between the public and the private sector. Now, gone are the days when those two strands of the public sphere, the government and the private sectors, can operate largely in silos. What really came out is a strong need for collaboration between these two segments of society in being able to co-develop initiatives, collaborate in implementation, because nobody can do it alone. And in this highly competitive environment and in this changing world order that we are in, a rapidly evolving world order that we are in, the ability to galvanize in a concerted approach every aspect of your society is a critical success factor that we believe, if properly implemented, will help in improving the stability of our economy.
And of course, the fintechs are forced to reckon with these days. And so there's no way you could have had such a summit without talking about them. And then one of the things that came out of the summit is that it's been reported that the fintechs are getting more funding from foreign investors, than back here. What's up with the opportunities back here? Are they not good enough, or they are not accessible to the fintechs?
Yes, the fintech momentum, the fintech, uh, the fintech sector was, came out very strongly in conversations, and it ties in very nicely to the knowledge economy narrative, because the knowledge economy, like I mentioned, is built on the institutionality of investment in technology, on educating your people and making sure your people are healthy, and also encouraging investments in research and development and innovative learning. Now, you have to understand that this is an area that's actually Nigeria's recorded a number of successes. The, of the five or so, so-called unicorns, Nigeria contributes four of the five were incubated in Nigeria, and that incubation suggests that there have been venture capitalists, there have been investments in being able to get them to the level where the foreign investors have now come in and been able to help them get to the level of valuation that they've gotten. So for me, what that shows is that there's massive opportunity domestically in the fintech space. And the fintech, and not only in fintech, really, because although a fintech is really what the attention has been on, is really about technology-enabled solutions, technology-enabled services, and the convergence of industries, which is now being enabled through technology. So you're seeing this happen in agriculture, you're seeing it happen in energy, and of course, fintech is very well known, but this is going across, it's cross-sectoral. And why fintech is now leading the way, the other sectors are also coming into the fold and coming into view. But I believe that the opportunities domestically still remains. I mean, there's large amounts of capital outside of our shores, so there's nothing wrong in people looking in and seeing the opportunities there are in Nigeria and coming in to try to crystallize those opportunities. I believe that even if the foreign investors are the ones increasingly taking these companies up to that level of valuation, it would only serve as an encouraging signal to domestic capital providers to start looking at this space and trying to find a niche or find an avenue for them to participate as well. And even for the commercial banks as well, who now, given the attention, given the valuations that a lot of these firms have now received, would only be an encouragement for commercial banks to start looking at this space and try to identify ways to start supporting this sector. So it's a win-win for everyone, in my view.
And now, after the talk, what's next? Or do we just wait till this time next year when NESG, the 28th summit, will be coming up? What's going to happen in between? What about implementation of some of these ideas?
So, yes, and that's very important, and something that really came out very strongly during the deliberations was the fact that I remember in the session that His Excellency, the former Prime Minister of Ethiopia, he noted on how a number of the policies that were implemented in their country and all the programs that they introduced was based on lessons learned or based on observations from programs that Nigeria had in place. So it's beyond just talking policy, it's beyond just discussing ideas and coming up with initiatives. The crux of the matter is in how effectively are we able to implement some of these major action points that came out of the summit. Policy is often I'll say, a canvas that government cast their loftiest aspirations, but that aspiration would have now to be transformed to real initiatives and implemented so that we start feeling the outcome. And as a part of that was the agreement between the Office of the Head of Civil Service of the Federation and the Ike Mokede Foundation, which is an agreement to digitize operations of the civil service with implementation of what was called the Enterprise Content Management Solution. And it was signed in the presence of His Excellency, the Vice President, Yemi Osibanjo. And the anticipated outcome is that it will improve the efficiency of civil service, increasing their capacity, making the operations more efficient, and introducing accountability and transparency to the process of the civil service. And we believe this will have a multiplier effect in translating to increases in improvement in ease of doing business, lowering cost of compliance burden when dealing with the private sector. But the accountability and transparency and trust it engenders between the public and private sector, it's a very key win and it's something that can be leveraged to even drive more efficiency throughout the public sector. So that's one tangible outcome of the summit, and that various that will follow in the deliberations.
All right, I guess even if we follow up with this one, and then we see some results, like you said, it will have a multiplier effect, and it will certainly be worth it. Thank you so much, Mr. John Uwajumogu, partner at Aston Young and a member of the Technical Summit at the 27th Nigerian Economic Summit. Enjoy the rest of your day.
Thank you. Pleasure.
After the break, our commodities market updates. It's Business Morning on Channels Television. You're welcome back. Well, oil prices slumped to their lowest in 2 weeks after official figures showed a surprise jump in U.S. inventories of crude and rising cases of COVID-19 in Europe, Russia, and some outbreaks of infection in China dented hopes for an economic recovery. Brent crude dropped by $1.58 to $83. Man, yesterday it was $85, having hit a 2-week low of $82.32 earlier and falling by 2.1% in the previous session. U.S. oil fell $1.39 to $81.27 a barrel, also a 1-week low after dropping 2.4% yesterday. Outbreaks of coronavirus infections in China and record deaths, the threat of lockdowns in Russia, along with rising cases in Western Europe, are putting the brakes on a multi-week rally in oil prices. How's this trickling down to Nigeria? We have Damilola Akimbami, Head of Research with Financial Derivatives, joining us for this conversation. Good to see you again, Damilola.
Good morning, Amy.
So I thought by now the world was, well, at least getting to live with COVID-19, so we wouldn't have cases where, for instance, I hear factories in China are being shut down because of COVID. Russia is considering lockdown. I thought with the vaccination rate and everything, we had gone past this.
Well, the world is definitely learning to cope and live with COVID right now. And the vaccine rates, we've seen an increase across a lot of countries. But bear in mind that the vaccines are not a cure to the virus. Just they help to boost your immunity and at least reduce the side effects that could occur as a result of one being infected by the virus. So that's what is happening right now with a lot of countries that are beginning to record a rise in COVID cases. And this is because a lot of these economies have reopened for business. A lot of them have relaxed on restriction measures and what.
So you have more interactions.
You have more interaction. But the thing is, as more people get vaccinated, you have what is called herd immunity, and that should, in a way, reduce the spread or the contagion rate. But as more countries resume and as more people go back to the offices, the workplaces, definitely there's that risk of a spread. And that has always been a major risk to the global growth forecast that by the IMF, by the World Bank, that if there's a spike in COVID cases, if there's even an emergence of a variant that is even more deadly, more severe than
I think the
Delta
worst so far is
variant.
Delta.
Yes, yes. So if there's a variant that is even more severe than Delta, I know we've been hearing talks about this new variant called the MU, coming up. So if you have variants coming up that actually that can resist these vaccines, then it becomes an issue. And well, what a lot of countries are doing right now and putting in place. So China, for instance, now had to shut down its factories, and China is a major global trading partner, even for Nigeria, as at second quarter, to our largest import trading partner. So whatever happens to China would affect the global economy, would also affect Nigeria. Bear in mind that China, aside from even the COVID issues, China is also facing coal and gas shortages, which definitely has led to a lot of factory owners switching to oil for power. And
which was why oil was enjoying the rally.
Exactly. And that's why we saw that rally in oil prices. So whatever happens to China definitely would have a spillover effect on the global economy.
Even the supply disruption, that has been going on in Europe, I think it's worse, a bit worse now for some days now.
Yes,
because
due to the
of
energy
this
crisis and what have you, and it's
and
spilling
then this spike
over.
in
Yes,
cases.
exactly. Yes, definitely.
And then what is it with the U.S. inventories jumping surprisingly? What's pushing them?
Well, now at least we're beginning to see the U.S. crude inventories recover from the Hurricane Ida and whatever, because when we had that Hurricane Ida and Nicholas storm, that affected U.S. oil infrastructure. And again, so basically this obviously led to dampened prospects for oil prices, and we saw that lead to a decline in oil prices. Aside from that, there are talks or potential talks about the Iranian oil deal. So that is coming on stream. At the point in time it was suspended around August, and now that thinking of revisiting the matter, it also definitely would impact on sentiment concerning oil, because once Iran is allowed to start exporting and its oil adds to the supply in the global market, that definitely would also depress oil prices.
And then do you see this affecting OPEC Plus, the allocation that's already there?
The ongoing quota. Well, they have a meeting in November, first week in November, so that should be that should hold sometime next week. It definitely will be one of the things they would consider. And OPEC has been cautious in increasing its output increase, despite pressure from the U.S. and from other major oil players in the market. OPEC has been able to stand its ground and has been cautious about increasing it, maintaining just 400,000 barrels per day increase on a monthly basis. It would definitely be one of the considerations. It's unlikely for them to deviate from their plan, because bear in mind that oil demand is still rising, and the global oil demand compared to the supply market is still there. So we have a supply deficit. So despite what is happening now, the market is still heavily skewed to higher demand compared to the increase in supply. So I think OPEC will most likely still maintain its current course.
500,000. So how do they affect all of this? How does it affect Nigeria?
Well, for Nigeria, all prices have slowed. $83 per barrel is still significantly over 100% higher than our budget benchmark. Yes. And for Nigeria, as long as oil prices remain high, it feeds back to us in terms of subsidy payments. We know that the federal government has come out to say that by second half of 2022, they're going to end payments of fuel subsidy. And some facts: one, all fuel imports account for about 30% of total forex spent on imports. Nigeria's petroleum products demand is about 15 million metric tons and is projected to increase to about 17 million metric tons by 2025. So definitely, if it has gotten to the point where the government has come to terms with the facts, we know that there's been that ongoing negotiation with Labour, and the government has also said that it only made provision for fuel subsidy just for the first half of 2022. So what does that mean for Nigeria? Once subsidies are removed, bear in mind that now, even with the implementation of the Petroleum Industry Act, paying subsidies or fuel subsidies have actually become illegal. So what does that mean? Definitely.
No, but the PIA does not directly abolish the payment of subsidy.
According to the PIA, you shouldn't be paying for subsidies. It's one of the conditions tied to the PIA. So the government knows that. So why we've seen this delay so far is because the government is trying to finalize or negotiate with labor because of the impact on welfare of consumers, of the average Nigerian. Because now definitely we're going to start paying more for petrol.
And it's going to have a spillover effect.
It's going to have a spillover effect. But bear in mind that diesel is actually the fuel used by the trucks that actually commute or transport goods and services. Petrol is used more in urban cities or for urban transport. So, and diesel has been around 320, 325.
But you and I know that. I
Yes.
mean, if petrol goes
Everything
up 1
is
naira,
affected.
it doesn't matter. It doesn't matter where they use diesel or where they use petrol.
I agree with you. So you're going to see that spillover effect in core inflation, which even based on September's inflation numbers increased to about 13.74, despite the fact that headline inflation declined. So we're going to see that. And the timing, I mean, why is the government waiting till second half of 2022? If you are going to remove him, as well remove it now, bite the bullet and
no, I guess we're not ready.
Well, yes, and I guess that.
And then you know, we're getting to the festive season.
Yeah.
Even
so
though I mean prices are not tapering
in
any way, so
yes.
I really don't.
So I guess maybe they're considering, okay, let's try and finalize on these negotiations. Let's try and put in place some palliatives that would reduce the impact of this subsidy removal on the consumer.
So when we hear that the government is going to spend $7 billion
Yes.
on fuel subsidy in the next 12 months, I mean, June is less than 12 months. Why are we projecting for 12 months?
So it's the World Bank that actually came up with that forecast that like, if Nigeria continues in this trend and if oil prices continue to rise, that Nigeria could spend up to $7 billion on fuel subsidy in the next 12 months. And to put that in context, that's about 75% of the Eurobond issue that was raised in September, which was about $4 billion. If the government sticks to its guns and removes fuel subsidy by the end of June, then definitely that projection might not necessarily materialize. But it's a note of caution that, look, if you continue in this state and oil prices continue to rise, there's that possibility. And what does that mean? That means you have to borrow more because, like I compared it to the Eurobond proceeds, that means you have to borrow more. And the government has already projected about 6 trillion naira for borrowing in 2022. 4 trillion of that, so that's over 50%, will be used to fund outstanding debt obligations. So meaning that if fuel subsidies are not removed, or even for whatever reason, your debt financing would increase.
And then the more you have to budget for debt financing, the less you can do for capital expenditure, and the less infrastructure you can have. And then, of course, it reduces economic activities and revenue eventually.
It has that spillover effect. And bear in mind that right now, the government has been enjoying low interest rates, both in the domestic and the international market. But by 2022, a lot of global economies and their central banks are going to start normalizing monetary policy, meaning they're going to stop quantitative easing, they're going to stop bond purchases, and then interest rates will start to increase, meaning the government will be spending more to service its debt, meaning that the revenue that is available for other key projects will be spent on debt. Right now...
And it's debt servicing.
Yes.
It's important to also note that we're not paying off...
Exactly. I was just about to compare that. Look, our debt to GDP is the ratio is about 35%, but if you compare it to the revenue, which is actually the main issue, it's over 70%.
Yes, as at August, it was 74%.
Exactly, that's high. So that ties up the necessary funds and investment for other sectors. So, and it's coming, this conversation is timely because everything is all about 2022. The same time, Dangote's refinery is expected to come on stream. And Dangote's refinery is about 650,000 barrels. The domestic refinery is about 450,000 barrels. If those can be brought back to functioning capacity, that brings our refining capacity to about 1.2 million barrels per day. But Nigeria requires about 1.5. So again, we need that investment.
And we hope Dangote would not be exporting, but to be servicing domestic demands. That's because, I mean, you can dictate, you know, for a company.
Definitely, all that will be resolved. And the most important thing is that as long as you can boost domestic refining capacity, then that addresses the issue of fuel imports. Then you don't need to spend as much to import fuel.
And then that also deals with the pressure on forex requirements and
forex supply issues.
Well, I guess we're waiting for Dangote.
So much, so much at
Hopefully, we would see it come up, and then we would see the product. I mean, we already see the fertilizer on.
Exactly.
So we do hope that we see that soon, and then it has the desired effects on the economy. Thank you so much, Damilola, for always being there and giving us details. So we'll just take a moment. When we come back, we'll head to the markets. You're welcome back. Well, we have Will now giving us details of what happened in the market yesterday.
Good morning, Ini. Yes, Will. I have the report for yesterday. Wasn't so good because I don't understand the sentiments in the equities turned negative. I don't know. Is it now Tuesday blues, Wednesday?
No, don't jump to. That's too soon. I mean, last week Tuesday you had a field day, so please, Will. It's just one of those things,
we don't just take off on a good note. We started off well. Monday was a good one. I was expecting Tuesday, Wednesday to just follow suit.
Well, you know, you have to clear your head. So sometimes you have to just calm down. So the market just calmed down, you know, to come on a brighter note.
Just like you said yesterday on the stock market report. You think it's just taking, you know, pulling back to make a comeback?
Exactly, something like that.
That was quite interesting. Okay, so the like I said, the sentiments in the equities market turned negative as investors sold off stocks of FBN. That's FBN Holdings, which was down about 6.1%. Nestle was also down. PZ Cousins and Access Bank, we saw sell-offs in those counters. And this is in spite of the positive market breadth that was observed at the close of trade yesterday. The all-share index declined by 0.06% to close at 41,790.26 points. The market capitalization depreciated further by, well, yesterday was flattish. Today, I mean, the day before the previous session was flattish. Now, yesterday, it depreciated by about 30 billion naira. Now, consequently, we see the month-to-date and the year-to-date return moderated to 3.9% and 3.8% respectively. Over to the activity chart, we see the total volume of trades decreased by 19.4% to 284.61 million units. And this was valued at 3.2 billion naira. And now note that this amount is 42% lower than what was recorded on Tuesday, and it was exchanged in about 5,000 deals. First Bank Holdings, that's FBN Holdings, was the most traded stock by volume and value. So it retained its the position on the leaderboard, although there were sell-offs in the stocks yesterday at 75.46 million units and 898.01 million naira. Now we see sectoral performance also, well, that was the difference there. It was broadly positive. The oil and gas, consumer goods, you know that consumer goods was unchanged, but it was positive on Tuesday. So industrial, insurance, and oil and gas were in the positive, but we're wondering what's happening, why the market went in the red. So we have Abdurrashid Momo, is a stockbroker at TLW Stockbrokers, to tell us what happened. Good morning, Abdurrashid.
Good morning. How are you?
I'm very well, thank you. And you?
I'm good.
Oh, great. Abdurrashid, I just want to say that we saw a flattish close on Tuesday, as I was saying earlier, and now we have a negative close yesterday. What is driving this decline in stocks despite the positive performance on the sectors? Is it safe to say, like Ini mentioned in this stock market report yesterday, that the market is pulling back to make a comeback?
Well, the truth is that for every rally, there must always be a correction, up or down. You understand? So basically, what market has done is that the market, the people who missed the bus are the ones coming down, and they are taking profit on them from them. Basically, we always have two tiers of the market. We have the investors and the traders. What's happening now is that the investors are taking position, while the traders are taking profits. One example, like you can see, a lot of people have been complaining about First Bank, especially what's been going on within the board of who is the largest holder in First Bank. And for now, First Bank is still going down. What they should know in First Bank is that despite the fact that prices dropping, there's still volume being traded. So I don't think people should actually panic themselves selling First Bank. As long as there's volume traded, there might be a reversal anytime soon. I think, yeah, that's what I can say for First Bank. But technically, on Monday, I did an analysis.
So I just want to take you back, Abdul Rashid, just quick one before
Yes.
you just hold your thought there.
Okay.
You talked about First
Okay.
Bank and that the struggle, the tussle for who's the
Yes.
larger shareholder. Don't you think that if the Financial Reporting Council of Nigeria did the audit of stocks, don't you think that would solve that problem?
Yeah, no, depending on what we say, the market is basically sentiment. Everybody wants to see how it's going to make money, right? Is what I'm saying that for people that actually bought those stocks then and they took advantage of the information that's going around, like in CRB, what we generally use, we use more of technical analysis, right? Technical analysis is not interested in the news. Yes, the news has triggered what has happened, but we now start looking at what they call the support and resistance levels. So the support and resistance levels we are actually talking about now. Despite all those spikes we saw in first, but plus was a level it could not cross. Now it's taking correction. And the next correction is going to take, depending on how low it goes, but the next trend is still going to beat that 12 naira plus for the last wave of the bull wave. So we are in the correcting wave now for First Bank. And generally the same market scenario when the corrective wave. What I wanted to say was that last week I said the height of the market was in January, which was about I think 44,000 points or so. Now the height of the market this year, and the market is trying to see if it can get to that same level. No, actually it was about 42,000 plus or so, or in January. So market needs to break that level. If market doesn't break that level, the market is not going anywhere. And from 2008 to date, market has, from the peak, has peaked every peak for 2018, 2020, and 2022. Market, the highs are getting lower. Until market breaks that trend, the market is just going to be flat for now.
Okay.
So
okay.
Yeah.
Thank you so much. And we're waiting for the market to break that level, like you say. We're going to switch very quickly to the bond auction that took place yesterday. Just want to mention that the DMO offered a total of 150.05 billion naira, and it sold 235.05 billion across the standard tenors. So, and there was a drop by 13 basis points in the long end of the curve, and we're seeing that this is now becoming like a trend. There's sort of the upward trend that we're expecting, that we're seeing a downward trend. So, that's what we have for the market today, and we're hoping more will come out of today's trade.
Yeah, well, I'll be there tonight for the equities. Thank you so much, Will. And we'll do a short break now. When we come back, we'll do an opening call to London. To stay with us. You're welcome back. Well, after a night spent crunching the numbers from the Chancellor's budget, I'm sure analysts and economists have a lot to say this morning, and Juliana is standing by to bring that to us. Hello, Juliana. Good morning.
Good morning, Ine.
So what are some of the reactions and expectations from the budget?
Well, I've got to say, I think the anticipation was more felt than the delivery, to be honest. And I suppose that's because this is the second budget of the year. So although there was so much gusto and anticipation expected from the Chancellor, I think what we really had was repetition of what we already know. One, which is, Britain is going to be getting a pay rise. In April, the national living wage is going to rise to £9.51. About 5 million public sector workers are also going to be getting a pay rise if inflation does drop, as the Bank of England are anticipating. Also as well, although the UK economy has been bumpy, it is still recovering. We are expected to be the top of the G7 nations when it comes to a post-pandemic recovery, meaning the Chancellor did have a lot of money in the coffers to loosen the purse strings and really focus on Boris Johnson's central government pledge, which is to level up, to kind of, take some of the money that has been locked in London in the southeast to the north. So a vast amount of infrastructure deals were announced, which are going to help people in the northeast and the northwest of England who are most deprived. And then, of course, the NHS, which is a huge talking point here in the UK. The government had already last month said they were going to raise national insurance next April to fund a social infrastructure bill. So lots of the detail we already knew. I suppose the feel-good factor, which was mentioned by you actually, Innie, yesterday, was alcohol duty. That is going to be lowered, so it's going to be cheaper for Brits to drink this autumn. So the cost of buying wine, champagne and beer is going to be lower, and of course fuel duty, because of the wholesale gas price and the surge we saw a couple of weeks ago to the pumps. That is not going to be increased anymore. That is going to remain low. But as you said, economists and analysts are still number crunching. I think the headline, particularly from the Resolution think tank that look at the less privileged in society, is that once again, they fall short. It's always in the favour of a Tory government to give back to those who work the hardest or make the most money. And I think a lot of people would say that's really what's been delivered in yesterday's budget.
And the row of fishing rights seems very far from over. This time we're here, a boat has been detained by France.
Yeah, this is a significant story, actually. There's an urgent question being read out in the House of Commons as we speak. It's an ongoing situation, but it's intensified because overnight we know that a British vessel was detained at a port called St. Helier by the French Maritime Minister, Annick Girardin. Now, the French say this has got nothing to do with the post-Brexit fishing rights. I think this is more to do with detail that would typically be brushed away because of discretion, but there is no discretion because the French are absolutely frustrated, to say the least, at the way their hauliers have been treated by the Brits and not giving them licenses and access to water that they would have been able to access before Brexit. Now, Jersey, which is very, very close to France, much more closer to France than it is to Britain, is a crown dependency of this country, and that has been the centre of lots of this tension. We know that there was a protest a couple of months ago by French vessels, and that is likely to increase. This hasn't been called war, but it's certainly been described as a conflict between British media here, and this is because the French want those fishing rights approved for their boats, and if they do not get them by the 2nd of November, more action is expected to be taken. So it is a very evolving story. Like I said, there is an urgent discussion taking place at the moment in the House of Commons. But again, we can't get away from Brexit fallout. It's ongoing. But of course, the French and the Brits are very, very close neighbours. So if this does spill out of control, only who knows what the next turn could be.
All right, Juliana, thank you for that update. We'll talk to you later at 1:30. So let's move over to the crypto space now. A 3.05% decrease in the market cap in the last 24 hours. The market cap as of this morning was $2.50 trillion. That's almost 52% increase in the market volume at $191.82 billion, over $50 billion added to the market, actually. The total market volume over the last 24 hours stood at, of course, 191, which makes a 51.57 increase. The total volume in DeFi currently, $25.56 billion. That's 13.33% of the total crypto market. All stable coins is now 155.10. Well, let's bring in Solomon now to tell us a bit of what's going on in the market. Hello, Solomon. Good morning.
Good morning, Amy.
So the Doge, Shiba Inu, Samo, the meme coins, they are not, I don't know, the Shiba Inu did very well this morning. Doge didn't look so good. What's the future of these meme coins from your perspective?
Yeah, the shit coins, they are just still on their crazy run, and I don't see them stopping anytime soon until Bitcoin gets to its peak. That's when we might see shit coins retracing or trying to do some serious correction. But at this point, I wouldn't encourage anyone going in to buy Dogecoin or going in to buy Shiba. It's actually too late. Too late right now to buy any of those coins.
So they shouldn't buy, but should we hold?
Yeah, you can hold. You can hold. If you bought
but not
4,
sell.
5 months ago, you're in good profit. You can hold, definitely.
Okay. But what do you see happening to Bitcoin? I mean, it's close to the weekend now. How do you see it ending this week?
Yeah, Bitcoin is basically just correcting. We are hoping it holds 58,000. But should it break 58,000, it would go down to 52,000. But either which way, once we are done with this little correction, we would see a new all-time high, talking of about $72,000 or $75,000. We are expecting a new all-time high after this brief correction.
Okay. When do you see that all-time high coming up? Anytime soon?
November. Second
November.
week of November.
November is next
November.
week. November is next week.
Exactly. Second week of November, we should see Bitcoin above 70,000.
Wow. Well, I'll hold you to your word, Solomon. Thank you so much, Solomon. We really have to run, and enjoy the rest of your day.
All right. All right.
So that's it on the program. Thank you so much for being a part of it. I'm Ini John Mekwa. Do remember to join us at 1:30. Business Incorporated will bring you updates from the world of business.